Hey folks, it's your favorite realtor, Andre Sells FL. Welcome to Dre's Take. This week, a recent poll of economists are predicting it's likely to be a buyer's market in late 2023, pointing to affordability, rising rents, and inflation as the main reasons for their predictions. They figure as long as rents are rising, it's going to make it tougher for those buyers to save up for down payment and keep them out of the buying market, which is going to mean less competition amongst homes, which means longer time on market, a little bit more difficulty for sellers to offload their properties than we've seen in previous years. But they also go on to note that the rent factor is a major issue and that it's going to outpace CPI and home price appreciation for at least through 2025. Which in my opinion means it puts more pressure on buyers to get out of the rent race. And ultimately, inventory is also going to play a large role in whether or not there's a need for the excess demand. Now, in recent months, we've seen a run-up of inventory. We kind of peaked and we're kind of sitting stagnant around the 3 months worth of inventory level. Here in the Orlando Regional Realtors Association coverage area, we've got about 2.53, so 2.5 months worth of inventory or so. For the broader stellar MLS area, which includes Tampa, Gainesville, and spreads out a bit further than just Orlando Metro, that figure creeps up to about 3 months worth of inventory. 2 weeks ago, it was actually under 3 at about 2.9, so it's just been kind of sitting there. What's interesting about that figure is it's comprised of new listings or total inventory in contrast to the sales pace. And what we're seeing is a slowdown in sales, not only because of affordability, but also because we're kind of back to the traditional real estate cycle, and this time of year is always slower. So if the sales are slowing up on account of both affordability and the traditional real estate cycle, how's that month's worth of inventory number holding up? You would think if everybody was coming to the market, if we were still getting an abundance of listings, the supply number would be jumping right now and not staying put at around 3 months. Well, that's because just as I predicted in other videos, the sellers are pulling back. New listings month over month from August to September dropped 27%, and year over year they dropped 17%. It's just what I expected. Once the sellers got wind of, I gotta buy at a higher rate, or it's not as easy to sell as I thought it would be anymore, we missed the boat, they withdrew their properties or they stopped coming to market altogether and they're sitting put. That's gonna keep pressure on inventory. And as long as inventories stay low, the demand that has receded from the market and will continue to recede will have a less overall impact on whether or not we see a flip in market conditions. I mentioned in a TikTok video a long time ago, I don't know, 5 or 6 months at this point, that what would happen is that we would see this downward trajectory of demand as we've seen an uptick from historically low inventory levels. And before that intersection point would take place, that what would happen is the demand would start to kind of balance out at some point as we lost that bottom quintile or quartile worth of buyers. And then inventory would also start to balance as builders stopped building and sellers stopped coming to market. And we would kind of have this parallel, albeit slimmer gap between supply and demand, but still weighted kind of towards the sellers, and it'd be a much slimmer gap, and it would just kind of run parallel for a while. And that's kind of what we're seeing right now. That's why we're stuck at this 3 month worth of inventory mark. My guess was actually 4 months, but it's looking like 3 months right now is the magic number. We'll see what happens come the spring, which is traditionally when more people enter the market, both on the selling and buying side. Depending on what rates are doing at that time is really going to determine what kind of demand exists at that point. And then we'll see whether or not sellers are willing to actually list, come to market, make a move, and if builders' confidence is back up and they actually jump into some new starts. Until then, we're just kind of in this limbo phase. It's going to be really interesting to see how it plays out. Home price growth has decelerated pretty substantially. It's still up year over year. We want to see that. We expect to see that. We can't let the train run away, the cart be a runaway trolley forever. That's dangerous and is unsustainable for the market. So It's actually good to see that number trending down, and hopefully we can find some good balance here on both sides and just get back to a healthy, sustainable market. Spring and summer of 2023 is really going to be the tale of the tape. If the Fed continues to be aggressive in fighting inflation and they don't change course on their rate hikes, we very well could see, I believe in 2024, more of a buyer's market if that's the case. Interestingly enough, when it comes to this inventory and what's selling and what home prices are doing, I always want to reiterate that it is very, very hyper local. So don't get caught up in these headlines that talk about national numbers, or even some of my videos that talk about Central Florida or Florida in more general terms. In your specific neck of the woods, things can be very, very different. I've got a graph here that shows the month's worth of inventory from my buddy John Chin over at Remy Emerson Residential. He puts these great little graphs together for us, and he went as far as to actually break it down into different areas of the city to show you just how different each hyper locale can be. And it's very important to have somebody who understands how to interpret this data and your local metrics and strategically plan around selling or buying in those areas based on those conditions. And we have the access to those tools and that data. So reach out to your realtor, whether that's me or somebody else. That's fine. I'd love to work with you if so, and I've got the skills to do so. But make sure you're reaching out to a qualified agent who's aware of this data and can interpret this data and put it to use for you. I got to go for now, but I'm going to link this article in my weekly email, and in the video here, I'm also going to share the Orlando Regional State of the Market graph that shows some really good information. It's going to show you, listings, median price point, days on market, all the good stuff that you want to know that's affecting our local real estate market. That'll be in my weekly email. You could peruse through that and kind of interpret the data how you will. But remember, if you really want an in-depth look at your specific property, give me a call. I'll be happy to help. It doesn't take me very long at this point to run those numbers and get a good grasp of what's going on in your neck of the woods. I look forward to hearing from you. Always happy to help. Andre Berry, Home Expo Realty. Take care, y'all.